Mahantesh Sabarad as well joins in on the show. Mahantesh, hi, afternoon. Just looking at the kind of commentary that you've seen from what was supposed to be a washed out quarter, that's Q1, be it Bajaj Finance, HDFC Bank, Bandhan Bank, all have come out with very positive feelers. Do you believe that all those concerns around the moratorium, how they're going to spell out into NPAs are a little overstretched, and if not about a month, 2 months back, right now is a good time as any to buy these stocks?
Good afternoon. Let me answer the last part that you asked me. Is that a good time? Is it a good time to buy the stocks? So then my answer is generally yes. Simply because what has happened is that while India has continued to have a lockdown, considerable amount of economic activity has already picked up pace now for the past few odd weeks, I would say, and therefore, the market is at good levels to really invest. You asked me about earlier about the way some of the financials have done well, especially the banks who have done well and are guiding for better performance ahead. Mind you, we should be conscious of the fact that there was a moratorium provided, and therefore there was a forbearance coming into the balance sheet of all these banks, and therefore the way they are reporting results and the way they are guiding is in the backdrop of that forbearance that is coming from that moratorium. Having said that, the other good piece of news for the banks generally has been that the agricultural activity has picked up pace quite smartly, and that is helping the Indian economy do really well. And unlike the deep cuts that are being anticipated, I'm sure by the time we are in September, the forecasts that have been made for a dire drop in terms of the economic activity will be revised upwards. So we are hopeful that upgrades will start happening on the economic front. Similar, it will follow through into the way stock upgrades will happen and earnings will be upgraded. So the upgrade cycle, I would say, has begun.
Good to hear that. Mahantesh, what's going on with the oil and gas pack today? I mean, starting off with the big boy BPCL to IGL to MGL to even to Reliance Industries and Petronet LNG, though I would keep Reliance out of that basket, they're all down.
Attach too much importance to a one-day move in a particular sector. You are aware that there are sectoral rotations that happen from time to time. Traders take positions, they cut their positions. So I'm not unduly worried about what's happening on the oil and gas front right now. I would say that this seems to be merely a sectoral rotation. There is no news backed stock movements that we are seeing. Neither is there any outlook change that we are anticipating as far as the oil and gas space is concerned. From an incremental point of view, no outlook change is what we are seeing in the oil and gas space.
Today, Maharashtra Scooters, we've got Rain Industries, not one we look at often, of course, but nonetheless, I can see a whole host of the Bajaj stocks actually across the board, as well as a few other names that are buzzing. L&T Finance, for example. In fact, in the financial space, I think even an M&M Financial is looking up today. It's a varied mix, but what are some of the stocks that are catching your eye this afternoon?
So I think the primary focus would be essentially on the consumer durable kind of stocks and the associated business activities that are happening. So we would be looking at chiefly consumer durables in the appliance space, for example, or in the clothing and retailing kind of space. Retailing would be a challenge. Would still hold true. So primarily in the consumer durable space is what we would look at, because there is an element of revenge buying that is happening. Even consumer discretionary names such as two-wheelers on the automobile sides would be the focus area right now, because there's been considerable movement in those stocks as well.
The The market, the consolidation continues, although it has to be said that we were on the brink of breaching that 10,700 mark. And from that level, you've seen a good bounce coming in. So almost lying flattish, and, there's no concern really today. Bajaj Finance, of course, has, really taken off today, and that's giving due cushion to the index. 33.31 on the stock right now. It's a 7% move that you're seeing intraday on Bajaj Finance alone. There's also IndusInd Bank, there's ICICI Bank. They're all stocks which are holding out. Along with that, Axis as well. And Nikuj, I would say, healthy consolidation for the market. For 4 days, we've had a heady run up. And it's fine if we take a bit of a breather or pause a bit here.
No, Aisha, I think a breather would be a healthy breather, because if markets keep on going to 11,000, 11,500, that's not going to last. I mean, a healthy market is much more important than a crazy market. If markets continue to rise the way they are rising for another days, it will be called as a euphoric and a crazy market. And a crazy market, we know when it climaxes, it does not climaxes in a very great manner. So you don't want a situation where the tail starts wagging the dog. So I think it's good what's happening. In fact, one cannot rule out more serious downside pressure. Just look at the crazy moves which are happening globally. Amazon is a $1.5 trillion company. Tesla now has become more valuable than Toyota. You got Microsoft and Apple now almost $1 trillion plus now. I don't think the earnings are going to blow out, but there is liquidity, there is ETF. The world feels that these tech companies cannot put any foot wrong. Everybody is not talking about the impact what US presidential election could have, how data is going to be monetized. Those all concerns have taken a backseat, and similarly that's happening in India also. So markets, sometimes they get blinded with momentum and liquidity. And that's where I think we are now. You don't want to see this market becoming or crossing that line where it becomes from healthy to unhealthy, or from stable to euphoric, or from crazy to a mania. Those are factors you don't want to see, because we all know, Aisha, after having seen markets for many years and decades now, that when a mania ends, when a crazy move ends, and when these exaggerated rallies, when they come to a climax, the end game is something which hurts retail investor, institutional investors, everybody.
Yeah, on Tesla, I just want to say, Nikuj, anything that Elon Musk is selling right now is selling like hotcakes. Even his jab at short sellers of Tesla and those red satin shorts got sold within just about 9 minutes of them hitting online apps. But anyway, moving on. Today, you got to doff your hat to Bajaj Finance, Nikunjan. I was just chatting with Mahantesh as well. The kind of commentary that you've seen from an HDFC Bank, from a Bandhan Bank, from a Bajaj Finance on this watershed of a Q1 that it was supposed to be is a sheer mark of resilience, and the market is recognizing that. It's a 7.25% intraday move that you're seeing on Bajaj Finance and all.
Aisha, Mahantesh perhaps will agree with me on this, that with Bajaj Finance, there was never a matter of survival. It was always a matter of when does growth come back? And growth for Bajaj Finance is a function of their outlook on the economy. In India, trust me, you can easily lend. It's very easy to give money. It is very important to recover the money. And that's what Bajaj Finance and HDFC Bank have mastered, that they know when to give money, and they know whom to give money or whom to give loan to, because they know that from those borrowers they can actually recover. So the fact that Bajaj Finance has started lending, and this is a big departure from what we heard from there along with the Q4 numbers, means that they are taking a much more constructive view of the economy, because their ability to lend was never under question. The ability to grow is always what they wanted, and the ability to lend is a function of how good they feel about lending. So has Bajaj Finance started lending? Is HDFC Bank now picking those sweet spots which are coming to them, where they are prioritizing the loan at their rate and they're prioritizing to the customers they want? Unlike a lot of PSU bankers I've spoken to, Aisha, they've put a shutter down. In Hindi, like we say, shutter down kar diya. They're just not lending. Good, bad, doesn't matter to me, hum loan nahi denge. So these guys are really getting lion's share of market share. But the fact that they've started lending, it also coincides with the view that the rural India is coming back. it's not that ugly, at least in some parts of urban India also. I was speaking to someone who was in Bangalore, life is normal there. I spoke to somebody who's coming from Jodhpur, I mean, another distinct relative of mine, things are fine. So, while we may look in, while we are all closed in Mumbai, in our home, and we're working from home, trust me, that's not happening in India. And that is the India what a Bajaj Finance and HDFC Bank have started lending to.
All right, so definitely seeing those signs of growth across the country. Mahantesh, if we move away from the consumer durables, though, what else would you be looking at? Or would you just focus a majority of your attention there, as you just mentioned? That continues to be, of course, the core. But there must be other opportunities as well emerging as we look at the broader markets now.
Let me just clarify why we are looking also at the consumer durable spaces, and I had reiterated earlier as well that agricultural sector is actually rebounding in a big manner, and agricultural sector feeds into the consumer durable, the FMCG segment in a big way, and then there is this associated ecosystem that starts growing. So apart from consumer durables, the space that we would be looking at is keenly watching the IT space, because in IT a lot of things are happening in their favor. The work has not really stopped. Rupee depreciation to some extent helps them. Deal wins are still in a way happening for most of the IT companies, and they are very well accustomed to a work from home kind of environment. And whatever said and done about the H1B visa bottleneck that they face, it adds to a little bit of cost in terms of rehiring at the local level. That cost is easily, I would say, passable to the client. Not now with a lag, but that is easily possible. So I foresee that most of the IT companies will not show a huge drop in terms of their growth rates. In fact, there could be a potential margin uptick because of the rupee depreciation that is happening. And deal wins are still continuing to happen. Deal talks are happening. So IT space is what we would keenly watch and look at now.
Mahantesh, where do you think some of the rural plays are now headed? Rural economy is doing better than urban economy. You know it, I know it, everyone in markets is talking about it. But where does one understand that, look, this is the right value for a Mahindra and Mahindra, or this is the right value for a agrarian crop company or a fine chemical company? Because right now there is only hope that rural economy will do better, but there is no evidence of that. But markets are factoring in that recovery really very, very smartly.
So I think there are bits and pieces of evidences that are coming out, right? We look at the monsoon progress, for example, it's quite well right now. So that augurs really well for the rural economy. The produce buying that is happening, the way the government has restocked itself, the FCI, Food Corporation of India buying of wheat grain, for example, is at an elevated level. That tells you that there is a lot of pumping that has happened in terms of money into the rural economy. Manrega schemes are at an elevated level. That means a lot of money is flowing, therefore, into the rural economy. These pieces of evidences are available in the form of figures. And one can easily interpret that as a buoyancy in the rural economy. What does it feed into in terms of the stock markets? What does it feed into? We talked of consumer durable as one space that it feeds into. We also know that crop chemicals are the ones which are really likely to do well as we see the buoyancy in the rural economy. And then I think the other space that one would really look at is, which we are also experiencing, is insurance is growing. Health insurance, general insurance kind of products are still capturing growth even in these times. That means somewhere, and that insurance growth is primarily happening in the rural centers. So I would place my bets on these sectors: consumer durables because of the rural economy play, consumer discretionaries because again rural economy is a lot of cash that is happening. You also have microfinance institutions, corporate science already, and even insurance or insurance companies. So I would place my bets in these manner because of the buoyancy that we are seeing in the rural economy.
What's your view on ITC now that ITC has gone ex-dividend? Would you think that institutional investors are unlikely to buy it largely because of ESG issues, or you think that's one of those deep value stocks which no one is talking about it today, but tomorrow or maybe after a few quarters it could be a fancied stock again?
No, not really, because if you had asked me this question 6 months, we would have still said that ITC is there because it's a big valuation play. The value that ITC is available compared to its peer is very cheap. But this COVID phenomenon that has happened has actually led to, I would say, some element of business value destruction for ITC, because COVID is, as you are aware, is a respiratory disease. It essentially affects your respiratory systems, and cigarette smoking is not likely to grow when you have a lot of people experiencing either themselves or see it for themselves from in near and dear ones. So there is this, I fear and I suspect that the cigarette business is getting gradually destroyed.
We've got happening there.
This is turning out to be quite an interesting story. Kunal, wanted to get your perspective in India Bulls, ever since we broke the story first, has seen quite a bit of flurry of activity. But what next for the chart pattern here?
So it looks attractive, and surprisingly, Aisha, I think the stock has underperformed. So on a day today, where many of these, HFCs have, risen up higher. Some of them are 5%, some of them are 10%. M&M Finance, some 12-13% as well. One would have expected that maybe the India Bulls Housing could also try and play a catch up in that sense, but it has underperformed. So I think one of the reasons which probably I can think of an attribute is the fact that the futures are on the ban side, so which is why speculative positions could not be added up into this stock. So I think that would be the only reason which can be attributed that the stock has underperformed, because of the lack of addition of fresh positions, even if it's intraday or even if it's carry forward because of the ban nature on the FNO side. But then, giving credit to the stock in last, 1 month, approximately from the June mid time frame, the stock had already given a very sharp uptick. So from 130, 140 levels, it had almost risen to 260, 263 kind of price uptick. So it's played its part in the second half of June, and I think that probably is one of the reasons why the stock is remaining more sideways. But as I said earlier, like for Bajaj Finance, that if all the stocks in the sector move up higher, then it's just a matter of time that even the laggards try and pick up pace sooner than later. So I think in that regards, I think it's just a matter of time that maybe India Bulls Housing could also participate on the upside again.